What's up guys, Ben here and welcome to Motivation to Invest. If you take a look at your PC or Mac, there's one name you're likely to see on there, and that's Intel. Intel is a chip making giant and was the market leader by revenue in 2019, taking the throne back from Samsung, who was ahead in 2018 and 2017. But recently Intel's share price has plummeted. It went from a 52-week high of $69 per share to less than $49 per share. Now the questions every value investor is asking is what has caused this massive decline? Will Intel stock bounce back, or has it permanently fallen from grace? Well, in this video we're going to find out as I deep dive into Intel stock and tell you whether I think it's a good buy right now. So without further ado, let's dive in. Welcome back guys to Motivation to Invest. Before we get started, it would really mean a lot to me if you guys can give this video a big thumbs up. That helps out the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, let's get into the video. So what has caused Intel's stock to plummet massively? Well, Intel's competitive advantage or moat is that it manufactures its own chips at its own foundries. Now this is great news for operating margins. However, on the negative side, if you have an operational issue, it's your problem to solve. And this is exactly what's happened to Intel. Whereas AMD has raced forward with their 7nm chip, Intel is lagging far behind with only a 10nm chip out there. This is not the first time Intel has run into an issue. Intel abandoned its classic upgrade cycle 4 years ago due to the rising difficulty of creating smaller microprocessors. In 2018, a difficult ramp from 14nm chips to 10nm chips resulted in a chip shortage that frustrated PC makers and left Intel vulnerable to AMD's new Ryzen CPUs, which offered comparable performance at lower prices compared to Intel's CPUs. Intel faced similar competition in the data center market from AMD's EPYC chips. Intel still hasn't resolved its chip shortage, but has declared it would boost its production capacity by another extra 20% this year. Meanwhile, AMD continues to launch its 7nm chips, while Intel only started selling a full family of 10nm chips in the second half of 2019, 3 years after the planned launch date. This is an operational disaster as Intel now has a reputation of missing production targets. Apple revealed that it's moving to its own chips for Mac computers. The switch from Intel chips to Apple Silicon will take around 2 years, with the leading foundry, Taiwan Semiconductor Manufacturing. Apple said its own Mac processors will deliver higher performance with lower power consumption. It will also integrate best-in-class security and other features. So Intel has took some major blows. We've got big manufacturing concerns and delays. We've got competitors coming up fast, such as AMD. And then we've also got Apple deciding to make its own chips. Combine these factors together and Intel's share price has plummeted massively. However, Intel has not been standing still. They have announced a reorganization of their management and business structure, and they've also decided to outsource some of their manufacturing to Taiwan Semiconductors. Although this could be a great short-term solution and allow Intel to meet its production goals, in the long term it means it's degrading its own competitive advantage. Intel also continues to invest aggressively in driverless cars by buying companies like Mobileye and Buffett. These acquisitions won't boost its revenue significantly in the near term, but they could help Intel establish a foothold in connected cars and prevent it from losing the next-gen market the same way it lost the smartphone market. So the bears believe that Intel's execution issues will persist, and the CEO, Bob Swan, lacks the engineering know-how to counter AMD. However, the bulls believe Intel will eventually resolve its chip shortage and strike back at AMD with more powerful next-gen chips in the PC and data center markets. Intel also still remains a crucial chip maker in China, since its domestic chip makers still can't match Intel in the high-end PC and data center markets yet. That technological superiority should help shield it from Chinese regulators for now. Intel's revenue and earnings are chugging along and expected to grow by between 1 and 2%. Although this may seem okay for such a large giant, AMD, its competitor, is predicted double-digit growth. Overall, you have to ask these questions. If you believe that Intel can solve its manufacturing issues and organize itself in a more efficient manner, then now could be a great time to purchase the stock. However, if you believe that Intel could actually be leapfrogged by AMD and be trailing behind for many, many years to come and become another dinosaur of the technological age, just the same thing what happened to Cisco and IBM, then you should steer clear of the stock for now. So have I bought shares in Intel? Personally, I'm sitting on the sidelines on this one and I'm watching it all play out. I do like Intel as a company. I think it's a strong brand and it does have this moat with regards to its manufacturing. However, these issues are not one-off and they've been reoccurring again and again and again. So personally, I think it's a good value stock at the moment, but it's not an incredible value stock at the moment. So I'm sitting on the sidelines. If it maybe drops a lot lower, maybe to around $35 a share, then I would be inclined to purchase shares and open a position in Intel. But at these levels, I'm happy to sit back and watch it all play out. So what are your thoughts on Intel as a business and as a stock? Let me know in the comments below and I'll join in the discussion. Also, if you enjoyed this video, go ahead and give it a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I'll see you guys in the next video. Invest safe.